Today I'm talking to you about the difference between day trading and investing, or even just trading and investing, or swing trading and investing, because there's actually a vast difference in the psychology between swing trading, day trading, and investing in the stock market. Now, investing is a completely different picture in the sense that, can you invest in Forex? Well, not really. If you look at it, investing is really made for stocks and indexes and commodities and that sort of thing. So if we're going to do investing, we've got to look more in a niche sort of market, or in a specific sort of market. How do you invest? Whereas day trading, we all know that day trading is getting out of your trades on the same day effectively most of the time. But sometimes when you're day trading, you kind of end up swing trading the trade. But at least with day trading, you can trade just about any instrument on earth. So we're going to talk about the investing first, and we're going to compare it to the day trading and the swing trading. Hey, it's Rob Guilty, it's logical trading. Don't forget, guys, trading is risky. It's super risky. If you don't like losing money and you don't like risk, don't trade. Now, wow, investing. If you're investing, it's so much easier. Because if you think about it, all you got to do is pick 10 of the best stocks and put your money in there and just leave it. And forget about it with a view that you're going to come back to it in a few years' time and see what it's all about. Obviously, if it starts crashing in between, you might want to sort of cycle out of a specific stock and put it into something else. But Warren Buffett, for example, didn't jump into huge major companies that did so well. For most of his portfolio, he owned Coca-Cola for years, and it was just a normal, great stock. You know what I mean? So he chose good companies, good, strong companies. So investing is effectively choosing good companies at a good time and investing in them and keeping them forever, I suppose. You can trade into the indexes as well. The indexes are also a fantastic investment because, for example, the S&P 500 in Australia is a good example of this. If you trade into the S&P 500 in Australia, you're trading into the 500 top companies. So you can effectively know that your wealth is spread and you're almost guaranteed to have an upward trajectory over time. Unless the country falls apart completely, there's really little chance of it losing completely. Effectively, this is going to keep on going up forever. Inflation will make it go up alone without the improvement of the companies. And the whole point of investing is you're expecting a company to succeed and do well. Now, the positives behind investing are also you're relaxed, you don't have to sit and watch your charts all day, and also you get dividends normally on a quarterly basis. So even if it's only once a year, it's fantastic. You're getting a percentage back from that company. In some cases, more than the bank can give you. So, you're sitting with that environment of, if it goes down a little bit, not a big deal. What I would normally do with investing is wait for the market to come back to me a little bit, a lot maybe, and then buy like crazy and just leave that and forget about it. Your day trading, on the other hand, gives you that psychological rush that you need. Everybody wants that psychological rush, or that instant gratification. That's a big thing these days, instant gratification. It seems to be a massive point in the markets. And instant gratification means you need to make money today, not in 5 years' time. You want to make it now. So while the old adage of time in the market and just invest and leave it forever, when you get to a certain age, you think, in 10 years' time, where am I going to be? So for the younger guys, if you're 18, 20, 30 years old, please, that's the way to go. Just invest, enjoy it, and have a normal job on the side. And if you can, add $1,000 every month or whatever the case to the trading scenario, and just keep building it up like a savings account. You'll be very pleased in 20, 30 years time when you've turned a few $1,000 into $1 million. You know what I mean? It will work. Day trading, on the other hand, just remember, when I say 80% of traders fail, when I say 69% of traders fail, when I say 90% of traders fail, what I actually mean is 99% of traders fail. Can you believe that? On the 5-minute charts, 99% of traders fail. On the 1 hour and 4 hour, 90% of traders fail. This is a fact. This is tests that they've done and research that they've done. And the reason traders fail at day trading is really simple. It's because of the psychology behind it. And I always teach the psychology of just trade, support and resistance, and manage your risk. Because that's what trading is all about. What trading should be for you, day trading, is look at it as, if I can take less loss, more win, I'm ahead. There's no way, there's people out there that are quoting that you can turn $1,000 or $100 into $1 million. And you know what? It's actually possible. If you get 10 trades in a row and you maximize every trade on gearing, right? 10 to 1, say. You start with $1,000 and you win, and you take the maximum trade on the next one and you win 10 times, you probably have $1 million. But here's the thing. To win 10 times in a row, you literally got to be a gambler. There's no way that you're going to win 10 times in a row. I don't know anyone who's going to win 10 times in a row. So how do you make a profit if you take 10 trades? The only way you can make a profit taking those 10 trades is by having a stop loss. So in other words, when you start taking a loss and it's going against you, take a small loss. And when it's going for you, let it run the course. And if possible, add to your trade and make your trade better. Easy, no big deal, guys. Just that's what you got to do. But no, what do? We start losing, we add to the trade, we lose the whole account, and so on and so on and so on. That's why no one can really take $1,000 and turn it into $1 million, because no one has got the psychology to make that happen. There are a few, and that's the 1% that can do it. But so few people are capable of taking that psychology and making it work. Now you must remember, investing, while you can have an emergency stop loss, you can put your stop loss way down on investing, because you can look at it as, if a company is basically failing, you're going to cycle out of it and put the money into something else. That's as bad as it gets in investing. Whereas with day trading, you're trying to make a quick buck. It goes up, it goes down, it goes up and down quickly. So you've got to look at how you can manage that risk as quickly as you possibly can. Otherwise, it's going to keep you in the ass. So it's simple. You use my support and resistance training. And by the way, while you're here, check out my blog, my secret blog, A Trade Every Day. 10-15 seconds of your time, nothing more. Visit the secret blog. Free trade on there every day, which I post totally free. Guys, it's not financial advice, just a trading idea. On the blog as well, you'll see on the left, a little PDF, free Forex book, my gift to you, asking nothing for it. But enjoy the trade every day. It's always nice to know what everybody else is doing, isn't it? Now that you've checked out the blog, you know you get a trade every day. That trade every day might just help you along the way. But that trade every day is very much more towards day trading and swing trading. It's not an investment, and it's normally on the indexes or the Forex. You can't invest on Forex because Forex does not go in one direction. If you look at the history of, say, the US dollar euro pair over the last 10 years, you probably find the price hasn't changed that much. Very much. It might even have dropped rather than gone up, whatever the case. Because pairs trade against each other. So you can only trade Forex. You cannot invest in Forex. That's unless you're quite sure that a country is going to crash and that currency is just going to go to nothing, then perhaps you can do that. But other than that, that's not an investment platform. An investment platform is either indexes, commodities, or stocks themselves. Keep in mind though, commodities as well are not a great investment. You know, they tend to keep their price and go up very slowly. And if you'd invested in gold 30 years ago, you wouldn't be much better off. Whereas if you'd invested in the S&P 500 30 years ago, you'd be a millionaire. So there's a big difference between investing in commodities and investing in a decent index or a decent bunch of stocks. I don't invest in Bitcoin because my opinion of Bitcoin is it's fresh air. It doesn't have any intrinsic value. There's nothing behind it, and I don't understand it well enough for me to say it's worthwhile putting my money into something like this. For me, Bitcoin is fresh air. So if I was to trade Bitcoin, it would be a day trade. In other words, in the morning, out in the afternoon. I wouldn't even hold it overnight because I might wake up tomorrow morning and it's gone. That's how much I trust Bitcoin. To me, it feels a lot like another one of these pyramid schemes, another one of these scams. And I just do not trust crypto whatsoever. And all over the internet, you can see these crypto scams and these crypto companies dropping off the map. Don't exclude Bitcoin from this scenario. It can happen. So be very, very, very careful when you're trading in the crypto area. Also, you'll find that the gearing is very poor on Bitcoin or crypto. The gearing is heavy. I mean, you've got to put 70% of the money down just to get anywhere. Whereas if you trade a good index, I mean, you can get 10 to 1 in some cases. Forex as well, mostly 10 to 1, sometimes more. Some of these companies will give you huge amounts of gearing on these products, but Bitcoin they won't, and crypto they won't. You won't get that kind of gearing. The difference between day trading and investing. But now, if you want to know more about risk is very, very, very important to your trading. Do me a favor, go check out the next video or the last video and learn more about managing your risk. Check out some of my other videos. Till next time, guys. Bye.